Hey, it's Rob. Welcome to Everyday Investor, the hottest TV show in the world. That's right, I said it. I don't care who knows it. This show is designed to help us grow our money. You see, we take our precious time, we go to work, and we're blessed if we can go to work. We get a paycheck, and then we go buy groceries. We take our time, we go to work, we get paid in order to provide, and that is a great thing. But imagine a life where you could have money make you money. Therefore, you would have a little bit more time to enjoy it with family, friends, engage in a purpose greater than yourself, all that kind of good stuff. That's what the Everyday Investor TV show is all about. We bring in different guests. They teach us how we can make money. Today, I'm super excited. We're going to be talking to my friend Tim, and he's going to be teaching us how we can make money partnering with investors. Yes, that's right. How you can make money joint venturing with other investors. Don't go anywhere. We'll be right back.
We have our own business criteria that I call it. However, at the end of the day, my principle with leveraging other people's money starts from helping their money work harder for them and leveraging a hard asset that has better, solid security compared to paper assets, for example.
Hey everyone, it's Ken Beekendam from LegalSecondSuites.com, and my tip of the week for you guys this week is about laundry. The Ontario Building Code does require that we have laundry within or accessible to the dwelling unit. So it's either you have to have it within your unit as in-suite laundry, or you have to have it in a common area that's accessible to both units. Now, trends are moving towards more in-suite laundry. Tenants are wanting their own laundry. Think about yourself and your family. Would you want to share laundry with another occupant, or would you rather have your own? Having your own in-suite laundry makes for a much more desirable unit to live. And you can actually get more rent too for your units by offering in-suite laundry. Laundry can be very compact. It doesn't need to be big, large units. You can get some smaller units, but definitely give this some consideration and get some in-suite laundry in your units. For more tips, please check out LegalSecondSuites.com. And for more information, download the checklist at LegalSecondSuites.com/checklist. See you guys next week.
The mortgage world has changed. Has your advice? Are you looking for a modern approach to your mortgage planning process? Advice tailored to your unique, ever-changing circumstances? Whether you're upsizing, downsizing, purchasing, or refinancing, the Kyle Ford Mortgage team works with individuals and companies to custom tailor the right mortgage product for you. Working with a wide selection of lenders, we're here to serve our clients and help them achieve their real estate and retirement goals. Contact the Kyle Ford Mortgage team today, Canada's mortgage choice.
Hey guys, Omar Khan here from Theta Trading with a weekly market update. Now, the markets have had a really bad start to the year. The S&P 500, the NASDAQ, the Dow Jones are all down substantially. Now, the question is why? Well, as we've talked about before, the markets don't like uncertainty. And right now, you have a lot of uncertainty. There's a war going on in the Ukraine. There's high inflation, high interest rates, high gas prices, high natural gas prices. This is all causing inflation. Now, when inflation is high, what happens is the central banks around the world, they have to raise interest rates, which is what we're happening right now. This slows the economy down and it brings asset values and investment down. And that's kind of what we're seeing right now. But our job is not to panic and to really understand what we've invested in. Back to you. We'll see you next week, guys. Hey, it's Rob. Welcome back to Everyday Investor. I'm talking to my friend Tim Tsai. Tim, I say my friend because we've talked here before the show for a few minutes, but we really don't know each other. Is Sarah, who produces the show with me, and she said, you got to meet this guy. He's well-diversed. He's been doing it for a while. So tell me a little bit about yourself. You're in Edmonton right now, and talk a little bit about, where you grew up, how you grew up, and how did you end up in real estate investing?
Thanks, Raph, for having me on the show today. I'm super excited. I actually was born and raised in Taipei, Taiwan. So English is actually not my first language. So, if I kind of mess up a little bit, that's why. I've been here for 23 years now, and it's really, English is really my primary language. However, it kind of comes out sometimes. So, I always say, wait till I'm drunk, the accent definitely comes out.
Nice.
So with that said, though, I really like what you just said. And I like, I'll put like a little quotation mark on it, simply because of the fact that I think this is why you and I are so passionate about paying it forward and sharing knowledge and experiences over the years, is the fact that I was brought up with that kind of mindset. Go to school, get a good job. I mean, get good grades, get a good job. The job is going to give you the pension, the paychecks, the ladder to climb, and maybe some benefits. And that's it. That's all you do. You're constantly trading hours for dollars. However, fortunately and unfortunately, by the age of 20, I've already had 2 heart attacks and a heart surgery. And that's really what woke me up from that old school, non-serving money mindset and life trajectory. I'll put it that way.
Wow.
And
I didn't know that.
yeah. So,
By the age of 20?
yeah, 18, I had one, 19, I had one. And then I had a surgery when I was 20. And I had a third one when I was 29, but that's a different story.
Wow.
Yeah.
Well, I'm glad to have you with us. You look great.
Thank you. You know what? That's also, once again, it's what fuels me these days to continue to build my portfolio and to continue to give back in the form of training.
So in the last 12 years, Tim, what are some different investment strategies that you've done? Tell me about the different, because we could have talked about anything today. We could have talked about, you mentioned, very large apartment buildings to rent to own to this or that. And what we landed on was teaching people that they can write a check to an investor and make some really great profits. And we'll get to that. But talk to me a little bit in the last 12 years. What are the different strategies you've done? And what do you like about each strategy? How are they different?
So I'll give you a quick, chronological order right now, because when I first got started, I was pretty young. I was 28 years old, actually. And so just turned 40, happy with that. And so when I first got started at 28 years old, even though I had a decent paying corporate job, this is real estate. I always say that in real estate, as you've said it before, I've heard you say that once, is the fact that it doesn't matter how much money you come with or how much money you're currently making. If you are wanting to scale up and build a healthy size portfolio that can withstand the test of time and economic conditions, you have to, at some point, leverage other people's money. And so that's kind of how I started. But I still had to choose one main strategy to focus on first, because I knew that I wanted to, and I needed to do something to learn one thing and do it really well first. And so that was actually how I, in a way, solidify my position, I guess, in my career as an investor. So my baby strategy is what we call lease options. I like to be a bit more technical. However, the street name for it is rent to own, as we all know it. So lease option was really the strategy that gave me the ability to walk away from my 6-figure corporate job in 25 months. So built up enough passive income, leveraging a little bit of my personal funds, but mostly other people's money to build that up in 2 years. And because of that, I was able to free up my time to take care of my health first. And then I started to really scale by approaching other investors. However, the strategy itself, by definition, it's more of a short-term strategy, because every single lease option, when you do it right, as you know, should have an end date between 2 to 4 years. And so what that means is by the time every single deal comes due, you actually are walking away with your original investment as well as a decent profit. And so I started venturing into private lending as a result. And I also leveraged that growth into multi-units right off the bat. And as luck or fate would have it, I actually started investing into the US in 2013 right off the bat as well. And so over the last 12 years now, just a quick overview, I guess some people will call it creative financing, because we do a lot of promissory notes, joint venture agreements, GP, LP, different corporate structures to get our portfolio moving. From a strategy perspective, we have lease options, we have single families, we have conversions, we have short-term rentals, midterm rentals, executive rentals, student rentals, and also infill and development. So the smallest development that I've done is basically an infill. It's tearing a house down and turning it into a suite of duplex right here in Edmonton. So that actually turns into what most people would see as a fourplex these days. And the biggest deal that I've been personally involved in directly is building a 92-unit condo building in the Lower Mainland BC area. And so that's sort of where we are and everything in between. But over the last 12 years, I've also been very fortunate to meet a lot of great people. So that's what brought me into the US and the UK market. The UK market's awesome. Finally getting to go back in September this year since pandemic started. So
No, that's
hopefully
great.
that helps a little bit.
No, that's great. And so you are the active partner on these deals. Is there any deals that you did where you were the passive partner? Like, have you invested, let's say Rav's doing something, did you give it to a Rav type and then you sat back and watched, or have you always been the active partner? So for example, when I first started, my first townhouse was with my mom, 16 years old, Kingston, Ontario. So I've been doing this 35 years. It was only about 10 to 15 years ago where I fully swapped, where I no longer wanted to take Tim's money and then go put it to work as the active investor. I wanted to be the passive investor and give Tim my money. So have you done that? Is that down the road, or do you just enjoy the perspiration, and the thinking and the making deals happen kind of stuff?
Yeah. Great question. I love the thinking part because I think, funny enough, I actually went to school for marketing, and my trajectory that I set for myself was I wanted to go into advertising. And I did. I worked at an advertising firm because I enjoyed that process of creation. Basically having a concept, having an idea, and putting in the steps and building the process and planning for it and execute on it and see it come to life. So I think that's the skill that really that has brought me some really great times over the last few years. And I will say this too, I've had a lot of bad times too, because anybody knows, real estate is a beast. It's a great animal if you know how to leverage it to build income streams and wealth. However, lots of factors go into it. But going back to your question, yes, absolutely. Over the last few years, I've been slowly transitioning into more of a passive position. However, what I've always said, I think maybe this is the way I was trained as a student 12 years ago, is the fact that being an educated investor ultimately means that you want to be the bank. And so I always look at it this way. I am right in the middle as an active investor. And on the one end, I'm constantly looking for opportunities and deals. On the other hand, I'm constantly looking for funds and OPMs. And my job is to marry the two. And obviously, as I grew my portfolio over the years, did some more transactions, buying and selling, cashing out, so to speak, I was able to place some passive positions in other projects too over the years.
We'll take a quick break here, but when we come back, I want you to talk about, this concept of using other people's money, but from both perspectives. So from Tim, he's got some project that he's doing, and it's, he needs $1 million to be able to do it, and what should the Tims out there be doing to attract money? And then also look at it from the vantage point of, Rav's got money. What should I be looking for in someone who's going to, have the brains and the working power and so on and so forth. So we're talking to my friend Tim. We're going to be talking about how we can make money by giving it out, and also how we can raise money if we have a project. Don't go anywhere. We'll be right back.
Hey, it's Kyle from the Kyle Ford Mortgage Team. This week I want to talk about financing properties, investment properties specifically, with less than 20% down. As many people know, it's quite common to buy a primary residence with 5, 10, or 15% down. But when it comes to buying an investment properties, the industry standard is 20%. At the Kyle Ford Mortgage Team, we specialize in helping investors purchase properties that are more difficult to qualify for. Often, we are able to get financing at up to 90% loan to value, which is a 10% down payment, by using private money. Now, this doesn't work for everybody, but if you're buying properties that need work, have significant upside, or have a clear exit strategy, we can help you acquire with less money down. If you have questions on how this works, don't hesitate to reach out to myself and the Kyle Ford Mortgage Team.
You've always dreamed of having rental income, but buying a rental property? Well, that's a tall order. Capitalize on the space in your home instead. Renovate and rent out that space with ease with LegalSecondSuites.com and the team at Wise Construction Group. With LegalSecondSuites.com, our talented team of BCIN designers, engineers, carpenters, and tradespeople can transform that unused space into a beautiful, legal, and safe rental unit. We're empowering the everyday homeowner to become an extraordinary landlord. Get more out of your home. Visit LegalSecondSuites.com for more information.
Costas Cavellos, founder of First Access Condos. Now, in our world, there are numerous investment opportunities and schemes that people pitch to you daily. Which one do you choose? Which one is right for you? Now, when it comes to investing, you want to invest in something that there's a great demand for, but not enough supply. And everyone knows, in Southern Ontario, the one thing that's in short supply is housing. First Access Condos lets you buy today and reap the benefits in the future. Pay today's prices to invest, sell at tomorrow's prices. That's the beauty of pre-construction condos, and we are First Access Condos.
Hey, it's Rav. Welcome back to Everyday Investor. I'm talking to my friend Tim Tsai. We're talking about how we can make money by lending out our money, and also how we can make money if we have a project by raising money, getting other people's money to help fund it. So Tim, talk a little bit about the first one. So you've got a project here. It's a big house in Toronto in High Park. And it's a huge home that you can convert into 8 units. You need about $1 million. So, and you don't have that $1 million. It's tied up in other projects. How does this work? Where do you go to get other people's money? What are you offering them? What's their security? All that kind of stuff. So if somebody out there is sitting with $100,000 or so and they don't know what to do with it, what can they do with it if they find someone like you? And talk to me about the returns as well.
Awesome. So I love that question because it's very near and dear to my heart. Because again, I started when I was a lot younger than what I am today now, kind of like you. And I really didn't have a lot of money, even though on paper made a lot of money, spent a lot of money too. So didn't keep a lot. And so really when I wanted to scale, that's exactly what I had to do at all times. So fortunately, the first thing that I will always share though, is that your network is your net worth. And I think we all know that concept very well. And so really what I mean by that is I was always actively going to networking events, meeting new people, putting myself into courses, constantly raising the bar on my education, my knowledge level. And I've had quite a few numbers of mentors throughout the years. And all those things are super important to me simply because of the fact that at 28, I don't know what people are thinking right now, looking at me on camera. However, at 20 years old, I look like I was 15 to most people. And so this is already lots more wrinkles and lots more years of experience down the road. And so I realized very quickly that when I went out there to talk to people, it was always nice to show them that I actually knew what I was doing. I always had proposals with me. And those proposals contained components that would be very, very important to a lot of the people that I will want to speak to. However, I really want to share something that was a big aha moment halfway through my career. So I'll sort of fast forward a little bit, is that instead of, I think right now I would basically call it a spray and pray, because I think this is what happens when a lot of us actually go into some sort of education and training, is that, we're so excited. We got a deal on the table. We got it under contract, and we build this beautiful deal proposal that we're just basically emailing it, handing it out. And then I realized halfway through, no. People like to do business with people that they know, like, and trust. And for me, it's the same way too, because through doing so many joint ventures, especially in the first 5 years of my career, I realized that, again, money is a funny thing. And I will say that funny is a funny thing, simply because of the fact that when something happens in their personal life, they don't give a flying F what is happening with the deal. They're going to recall on you. They're going to put pressure on you. They're going to make changes on you. And this is probably for another episode. In 2016, I basically lost $1 million overnight. And that $1 million most of it was OPM. And I literally tucked my tails between my legs And I had to go and talk to the people that I was managing and investing their money for. And that was involved in those projects. And to my surprises, some of the people that had been with me for 5-6 years that had made tons and tons of money, way better returns than what their gold portfolio, their RSPs, their mutual funds, their savings account could have made for them, all of a sudden go, oh, no, Tim made a mistake. So now we got to get all of our money back. Whereas some people, they said, you know what, Tim, we've seen you grow over the years. And so we believe in you. If you say that you got a plan to recover our money and still pay us the promised returns, we trust you. We believe in you. And so this goes back to what I really want to share is my process is very different now. Every time I get a chance, I want to engage in conversations with my potential investors, how I can help you. However, more importantly, do our values and visions actually align as people, as human beings? Yes, we're investors, and you're going to be trusting me with your hard-earned dollars. I don't take that lightly because somebody did that to me. That's what I said earlier. That was the whole reason why I decided to get myself trained up to do this better. And so I wasn't ever going to do that to other people. Plus, once we learned actually how to make money, and this was also what gave me, I guess, what a lot of people would call the staying power. Losing $1 million was probably one of the best things that could have happened to me at that time in my career.
And because, so were you able to recoup that?
Yes. And I was just going to go into it because of that experience, because I think we've all read books and then people's autobiographies saying successful entrepreneurs throughout the last couple of centuries, especially, they can lose something and then rebuild it back twice as fast. And literally, that's what gave me the confidence to actually say yes to coming onto your show today too, is the fact that it took me 6 years to build and lose quite a big chunk of my portfolio. And I'm not just talking about my entire portfolio. I'm just talking about equity and cash. That was $1 million lost. However, between 2016, when that happened, it took me less than 3 years' time to not only double back our portfolio, paid out all the investors, doubled our cash flow. We were able to scale beyond the North American borders as well. So that's really what I think I've witnessed firsthand personally, so that today I can sit in front of you and be like, hey, Ravi, I got something to share and I got something to say, and it works. Because through that experience, how I would actually approach people now is that every time I meet somebody new, when I go into a networking event, for example, these days to meet other potential investors or potential joint venture partners, I don't spray and pray anymore. I don't just go out there and hand out my business cards. I don't even actually bring my deal proposals with me. I basically start the process with getting to know them first. I mean, if some people want to be a bit more structured, we've all heard of a few different techniques. One of the things that I would leverage more so, it's kind of like reminding myself how to engage in a more meaningful conversation with people, is the acronym FORM, FORM. I ask them about their family, about their occupations, and then ask about recreations. What are their hobbies, what they enjoy doing? And last but not least, AM stands for money. How are you currently investing? What brought you here into this event, kind of thing? So I leverage that to kind of guide myself to engage in those conversations. However, I don't want to basically engage in a deeper conversation right there and then, because it's all about really understanding where we stand. And then I will always do a proper follow-up. So I either call them, as I said I would before leaving the event, or email them, or whatever way of follow-up that I did say. It could be also going on social media, shoot them over a Facebook Messenger message as well. Regardless, that's where the conversation really starts. Because the other thing that I've also learned is that when people want to park their money with you, it's a very private thing. You've got to learn to respect their privacy and their sensitivity to talking about their financial situations and their financial goals. I mean, I'm not a mortgage broker. However, I'm sure you've heard this as well, and maybe even come across this yourself, is that some people, they will tell you they have a lot more than they actually have. And some people will tell you that they have a lot less than what they actually have, because they don't know you. They cannot tell you from their neighbor Joe next door at the moment.
So what I hear you saying is if I'm an active investor and I need funds and I want to raise funds, the number one thing is it's all about relationships. It's not about who you know, it's about who knows you, who likes you, who trusts you. And so you get out there, you're in networking events, you're talking to family, friends, neighbors, getting to know them, and then offering them an investment opportunity. Yeah?
Absolutely. Yes.
Okay, great. Now, let's say I'm now one of those guys. So now Tim meets Rav. Rav likes Tim, trusts him. What now, Tim, can you offer me? So I've got $100,000, not much. We're just gonna do a simple duplex conversion. What kind of returns do you look for at a minimum if you're gonna get into a joint venture relationship?
That's a very straight up question and I love it. So we have our own business criteria that I call it. However, at the end of the day, my principle with leveraging other people's money starts from helping their money work harder for them and leveraging a hard asset that has better solid security compared to paper assets, for example. So those are two different categories that I work on. And so the first one is every single deal, because obviously we all know that for most hard asset conversions, we're always going through the BRRRR process. I mean, I always call BRRRR a process because that's really how you do it. Because over the years, we've also been fortunate enough to go into buying and selling businesses too, not just real estate anymore. And so
explain that BRRRR. What does that mean? BRRRR?
Yeah, so BRRRR, as real estate investors would know it stands for buy, renovate, rent, refinance, and repeat. And so again, it's all about improving the performance. And again, educated investors and smart investors are performance-based investors. This is why we are not the buy, rent, and pray investors anymore. And so basically, like I said earlier, I would still have my deal proposal. So basically, all the due diligence that I have done with that particular deal, and I will bring that into the conversation with my potential investor as well. And so in this particular case, going back to the first question, which is what kind of return are we looking at? Obviously, ideally, we're looking at an infinite return because through the BRRRR process, when you refinance and cash out, ideally, you're able to take out every last penny of your initial investment. And that's why we call it infinite return. However, depending on the market and really the strategies and the type of end client you are going to flipping that property to or renting that property to, and again, lending rules, you may not actually get all that money back out. And so when it comes to the BRRRR process, at the end of the day, we actually focus a lot more on cash return rather than the overall deal return. Because as you know, if you're holding onto the property on income properties, it's hard to actually calculate the actual deal ROI because return on investment is, for me, defined as a clear start and clear end date. And that's how we do the return on investment. Whereas income properties, we focus a lot more on, well, how hard is my money making for me or working for me on an annual basis? And that's cash on cash. And so typically speaking, we aim for cash on cash of 10% or higher. I know for some people that sounds a little low, especially being in real estate, but that is not including, and this is cash on cash right off the bat, that is not including your pay down and potentially your natural market appreciation.
Yeah, no, that doesn't sound low at all. We've got to wrap it up. I can't believe our show's over here. But basically what you're saying is if Rav has $100,000 and wants to partner with Tim, we're going to do something where that dwelling is going to increase in value. Somebody's going to be paying down my mortgage, and then the cash flow component is going to be 10% on my money. So if I give you $100,000, I'm also going to make $10,000 a year just on the cash flow, not including it going up and somebody paying down the mortgage. Tim, listen, man, it's been great having you on the show. For those of you that are watching and you want Tim's information's right there on the screen. If you want to partner with Tim or if you just want to pick his brain, Tim, is that okay if people get in touch with you?
Yes,
okay, well,
absolutely.
That's fantastic. Listen, I really, really appreciate you taking your time out and being on the show with me.
Thank you for having me, Raf.
Yes, absolutely. And thank you guys for watching. Without you, we would not have a show. If you want to see this show again or any others on demand, please go to our YouTube channel. You can find that through the site, everydayinvestor.com. Until then, we'll see you next week, same place, same time. Honey, I love you. I'll be home soon. Bye, everyone.